Earlier this morning, NYSE parent company Intercontinental Exchange unveiled its March Mortgage Monitor that examines key trends and developments in the mortgage and housing space. Well, joining me now with more is Andy Walden. He's ICE's head of mortgage and housing market research. Andy, good morning to you.
Good morning, Kristen. Good to see you again.
Great to see you as well. Now, this month's report takes an in-depth look at the latest property insurance data across the country. What trends stood out to you?
Yeah, we're actually seeing some good news on the property insurance front for the first time in several years out there in the market. Now, we did see property insurance costs rise by another 6.5% last year, hitting another all-time high. But that's half the rate of growth that we saw in 2024 and 2023. So certainly slowing down there a little bit. In the fourth quarter, we recorded our first quarter-over-quarter gain since, or improvement, I should say, since we started tracking that data in late 2023. And when you look at some of those more expensive areas to obtain insurance, you look at Florida, you look at the Gulf Coast of Louisiana, you look at Texas, we actually saw insurance costs come down there in 2025. So some good news potentially on the horizon here in 2026 from a property insurance standpoint.
What do you think is driving this rate of change?
I think there's a couple of different factors. One is home price growth certainly slowing down. So the rate of increase in coverage needed has improved. We saw the slowest rate there of growth since 2020. So that's certainly been impactful and helpful there in the market. The other thing was the cost of $1,000 of insurance coverage itself. That rate of growth has slowed down. It grew by 2% in 2025. And again, when you look in areas like Florida and Texas, we actually saw reductions in the cost of coverage itself. You're also seeing less reliance on state-backed plans in the state of Florida. That's been cut in half over the last couple of years. And you're simply seeing more folks shop for insurance, and those that are switching their plans are paying less than those that are staying. So a number of different factors there, all of them helping to kind of curb that rate of property insurance growth.
Andy, I see that this data also showed that mortgage rates dipped below 6% for the first time in 3 years in late February. What impact has that had on affordability?
Yeah, certainly a sight for sore eyes there to see a 5 at the front of mortgage rates for the first time in 3 years. It's helped both prospective home buyers and existing homeowners out there in the market. When you look at folks shopping for a home this spring, the monthly payment needed to buy the average price home is down by about $185 a month from the same time last year. That's the most attractive affordability has been in the last 4 spring buying seasons as we've kind of opened those seasons up. So certainly some welcome news there for prospective home buyers. When you look at folks that have bought their home over the last 3 years, more of those folks are in the money for a refinance than we've seen in quite some time as well. At the end of February, there were 5.4 million existing homeowners that could have refinanced their mortgage to improve their rate by at least 0.75%. That's the highest that population has been in 4 years as well. So good news for prospective homebuyers out there shopping this spring. Good news for existing homeowners as we enter this spring as well.
What does this mean for refinancing?
Yeah, refinancing actually hit its highest level in the fourth quarter that we've seen since early 2022. So more refinance activity out there in the market. When you look at home price growth this spring, that's actually slowed down a little bit. We're looking at a 0.4% home price growth rate. If you look at our latest ICE home price index, that's the slowest that has been, dating all the way back to 2012 outside of a single month in 2023. So slower rates of home price growth. There is some early sign of maybe some firming here this spring. When you look at January to February home price growth, that rose by 0.13% on an adjusted basis. It's equivalent to a 1.5% growth rate, strongest that it's been in a year. So maybe some very early signs of firming prices on softer rates, which will be a trend worth watching here early this spring.
I know you referenced home prices earlier, Andy. Any trends that are sticking out when it comes to different regions across the country?
Yeah, when you look at the South and West, those are still areas where home prices are down. 40% of markets are seeing price declines from the same time last year. Again, those are primarily in the South and Western regions of the country. You had been seeing some pretty noticeable slowing. 70% of markets are seeing annual home price growth slow over the last few months. So that's a trend that I would watch. Although, again, as I mentioned, some early firming this spring. Midwest and Northeastern regions still remain firmer than the overall national average.
Mm-hmm. Now, of course, when it comes to what we could see this spring, has what's transpired in the Middle East the past few weeks changed your outlook at all?
A little bit, right? Mostly on an interest rate front. Now, you've seen 10-year Treasury yields come up a little bit. That's resulted in slightly higher mortgage rates, but they're still attractive to where they've been over the last couple of years. Even with 10-year Treasury yields moving up, you're still looking at mortgage rates in the low 6% rate or 6% range as of last Friday. So still some positive news, maybe not quite as positive as it was 2 weeks ago, but the upward pressure in mortgage rates so far has been relatively modest, and you're still looking at pretty strong home affordability as we enter this spring.
Let's talk longer term, because if this spring isn't the right time for people to strike when it comes to finding a new home, what do you anticipate that they can expect 6 months, 12 months from now? Of course, you referenced the importance of interest rates, and we do know that we are going to get a new Fed chair come the summertime.
Yeah. Now, when you look at the futures market and look at where 30-year mortgage rates are trading right now, you're looking at an eighth of a point improvement, roughly, is what the market is pricing in over the next 6 months. Now, obviously, a lot going on from a macroeconomic perspective. We're still looking at inflationary numbers, and obviously the war in the Middle East. So a number of different factors that could change that trajectory. But as things are trading right now, it's still for modest improvements in mortgage interest rates over the next 6 months. And again, when you look at home affordability overall, we're still stretched nationally. That's not something that's going to fully normalize this year. But as we move forward through the next few years and we see more moderation in home price growth, incomes outpacing what we're seeing in home price growth out there in the market, we should continue to see that path forward and that slow progression and improvement in affordability here over the next couple of years.
Andy Walden, ICE's head of mortgage and housing research. Thank you so much for joining us this morning.
All right. Thank you, Kristen. Appreciate you.
Great to see you.